Morning, everyone. Johnny, Mr. Forex Fire. Got me coffee in hand. So yesterday we spoke a little bit about the Harmonics and PitchForks and how we can overlay things on there, okay, to make trading a little bit more visual. And not only that, and give it a bit more guidance to your trading experience, okay? A lot of platforms out there charge hundreds of dollars for it, but we are forward testing something where I'm showing you it for free. What we're going to be doing today, we're still going to continue with that. Going into the week after and the week after that, we may fall back onto the Forex Fire harmonic trading, but for now we're going to be doing the PitchForks with this, okay? And one thing I want to sort of touch base with before we start is, yes, we started off a trade yesterday, just as a recap, okay? I got in a little early. It was purposely done. I got in a little early just to show you not to sort of get over enthusiastic. Because this is a strategy where we need for price to do what it needs to do and move a bit. Thankfully, we obviously use risk to reward in conjunction with, in conjunction with what we do. Yes, we are forward testing with a 10K demo account. I showed you how to set those up and how to name them. We start off with around about a $15 or a £15 loss. Brought it back on the next trade, and we took around about 30 pound or so. Yes, we had to smooth the crap over what we lost, but we ended the day in about I do believe, because I took another trade while I was offline. Let's take a look. We've ended the day, or yesterday, in just over £11.50 of profit. Okay, I'm going to share the screen in a moment, but a lot of you out there might think, well, that's not much money. Yeah, it's not, but the way I'm trying to forward test this, okay, because a lot of people like to try and use these prop firms. And yes, 10K, 25K, 50K, 75K, 100K might sound like a lot of money, but a lot of these prop firms, you have drawdown that you can only use, okay? So you need to flip everything on its head. And what I mean by that is, when you flip something on its head, yes, the 10K can be used as a leverage tool, but what you're only able to really trade with is your drawdown level, if that makes sense. So let's say a 10K, your drawdown level, daily drawdown or overall drawdown that you possibly be able to only sort of bleed from the account before it's gone, is around about £500, okay? And that's based upon the FTMO one, you know, so you've still got to treat this. Yes, 10,000, it's a nice figure, but you've still got to look at the other side of the coin, what lies beneath, okay? So in that instance, what we are doing, we are slowly using small lot sizes. Let's build the account up and get a nice sort of building block foundation, solid concrete foundation built, okay? And use that style of approach rather than just thinking, yes, I've got 10K, I'm going to put a full lot size on it. It's not going to last long. You might get one or two good trades, but eventually you're going to get caught out. So when you're looking at these figures at the moment, yes, you might think 10, 15 pound, 20, 30 pounds, not much. You stack them up, and then you go into your equity and profits, you've then got a bigger pot to be able to fall back from, okay? So when you are forward testing, whenever you are testing anything, and you can put anything on your demo account, treat this as if that's going to be like an 8% or a 10% drawdown equity, and use that as your actual trading balance. Don't look at it from thinking, yes, I've got 10K in my hand, 50K, 100K. You've got to look at what you would be willing to lose because let's face it, not everybody has 10K to put straight into an account, or 50K or 100K. Okay, I know I certainly didn't when I first started trading. So you've still got to treat this as, like I say, FTMO as an example. FTMO on a 10K challenge, they tell you you've only got £500 worth of daily drawdown. So we've got to take that into context. Look from it from outside the box on a big 30,000 foot bird's eye view, and be patient. Be patient, because one thing I can guarantee you, okay, especially being inside of this group that we have here, the Forex via Discord, there is no high tickets, there is no high subscriptions, there is no high whatever, there is no rush. You simply come in, take your time, listen to a few things that I have to say. I'm not perfect. I don't sort of profess to be, but what I have been over the years of my sort of failures is I've become consistent. I've learned from my mistakes. I now know my pitfalls and what I don't want to be sort of going back into. So I've learned from a lot of things over the last 5 years in trading, and more so the last year and a bit when I've been putting myself forward as a guinea pig and doing these challenges. I've now become more respectful of what the challenges are, what they hold, and what you actually have at your disposal to trade with. Okay, so yes, you might think 10k, 25k, 50k, 75k, 100k is a large amount. It is, but remember, there's always something that lies underneath that can bite you. Okay, so when you flip the coin over, in this instance, I'm treating this as I would on the FTMO challenge, where you would only have a run of $500 or £500 daily drawdown. And as long as I can just use minimal lot size, build this up each day, forward test what we're doing with this, and build our pot, I'm happy. Okay, and then if we can show that it can work, and then you try this yourself and you resonate with it, at least you know the approach I've done, and then you can sort of practice and do the approach yourself. Okay, so that's enough of me rattling on. What we're going to do, I'm going to pause the video, I'm going to come back, and then we're going to set the charts up and look what we can see on the fire harmonic alerts and get something on the charts for today. Okay, so I will be back in a second. I'll be back in a second. Hi guys, so we're back. Just going to share my screen. I'm going to look at one trade at the moment. I'm going to look at the GBP Australian dollar. Okay, we've got this here. We got an alert on the fire harmonics. Okay, so as always, we're just going to click on the harmonic pattern. It showed us it on there. Let's get this drawn out. And if you don't know how to get all this set up, I've got more info on my YouTube channel or in the Discord, guys. I'm not going to run through it each day. Okay, so let's just make that a bit bigger. Get that up here. Right, so once we've got this filled out, I'm just going to get rid of the noise. Okay, and then I'm going to come on the pitchfork. And then we're going to draw that out. We can see it's came to the sort of outer realm, as I'm going to call it. Okay, from there, I'm going to go down to the Heikin-Ashi candles. I'm going to bring in the whole suite strategy. I'm going to drill down to 15 minutes. See, we've got a sell here now. I'll go down to 5 minute as well. So at the moment, just while I analyze this, I can see the midway point of the harmonic. It's normally these go to the median line. Excuse me. There's a lot of false information out on obviously Facebook, the net, and everything at the moment, where they say 80% chance it goes to this line. There's only 80% chance it goes to a certain level just below from the D point, and it's nowhere near where the medium line is. In all honesty, direction and price will generally come to the halfway point. 50%, okay, 50% on anything in the Forex world on the charts is a magic area, okay, as to a quarter points, okay. So 50%, am I comfortable with the trade on this at the moment based upon that? Possibly not. I don't think I would want to get into this, to be fair. I think I've missed the chance for that, because this came around about 10 to 7. Let's just take a look. Ten to 7. The alert came for this just after 7 o'clock to tell us to get into it, you know. So 10 to 7, the sell came. And then just after 7 o'clock, it was telling us to sell. So 5 past 7. So around about 5 past 7 is there. And there's been a good 80 pips. So I'm not up where I am up at that time. But unfortunately, I don't start to get on the charts until just before 9 o'clock. So I'm not upset by that. That's just giving me extra sort of confluence and everything. That's what I've got set up there for these harmonic pattern alerts to this whole sweet strategy. It's telling me at 10 to 7, we got this, okay? We got the pivot point sell, okay? Just after 7 o'clock, it was telling us on the harmonic scanner to sell it. And then it went from there, right around 15 minutes after, it started dropping down, and it took around about just on 2 hours to get the 80 pips. That would have been a fantastic move for the day, to be fair. That would have been the day's trading done, to be honest, because we would have possibly been looking at a short, obviously, from that to the high to where it's at the moment. It's nearly a 1 to 5 risk, to be fair. I possibly would take it to that area there, not the median line. I would take it to that level there. That risk there is a 1 to 5.73, and I like I say, I go back onto risking, okay. I wouldn't risk 1%. There's a lot of things out there as well. If you risk 1%, you'll get that back. No, when you are doing these funded challenges, you overall, it's imperative that you look at, yes, you might have a 10K challenge, but you only have a 500 drawdown. You only have a 500 drawdown overall. So you've got to implement that into it, okay? So what are you willing to risk out of that 500 to sort of continue with your trading? So risking these 1% is stupid. You know, you need to be doing like quarters and things like that, just so you can factor in. If you go into drawdown, you can factor in other positions, other buying or selling positions ready for, because this is what you have overall, right? This is what you have that you're willing to lose from, okay? You could split this into 2 different areas, okay? So you've got, instead of a 0.5%, let's say, instead of going 0.5% all in on the entry, you could say, right, 0.25 on this entry. If we go into further drawdown, I'll take a further 0.25%, because overall I'm willing to risk 0.5% on that drawdown area. If it comes in and touches the second area and then it takes off, it's a win-win situation. If on the 0.25% it hits your entry area and then it doesn't have any drawdown and then it takes off and hits your TP, you've started with 0, you've ended up with 1, so you've ended up with more than what you started with. So this is what you need to get yourself into. You don't need to put all your eggs in one basket, you know. So if you bear with me, I'm just going to have a little further look around on the charts. I'm going to see if I can find this setup, and then we'll come back on and I'll go through the process, okay? So hopefully you're getting a little bit more than just setting up charts today. You're getting a little bit more of an insight in how I think and how I approach the charts, my mindset, what I look at when it looks at sort of risking percentages, and more so, again, stop looking at the bigger, like the big picture of these big numbers of money. You need to look at what your general drawdown on a daily basis would be on the rules and regulations, and work work your trading from that monetary value, if that makes sense. So I hope you're getting some value out of this today. I'm going to be back in a moment when we get back on the charts, when I find something to work upon. Okay, so I won't be long, guys. Won't be long. Hi guys, so I've drilled this down to the NZD card. It's a pair that I don't normally trade, to be fair. What I'm going to be looking at is, obviously, this is the account 315, followed on from yesterday. I'm going to trade from this, and we're going to use small lot sizes again, okay? We're on the first sort of dotted line funnel area. Overall, the harmonic scan is from the hour. If we go up to the 4 hourly, we can see, I mean, obviously, there's been a big downtrend. We're starting to have a bit of a shift up. We've broken structure, just to add a few bit more confluencing in. We do have this area here. If I just pull this across, I'll just make that a little bit thinner. I'll do it like that. Go back down to 5 minutes. That's a significant area of importance. Whoops. Put that back. Take this down there, that area there. And I also want to highlight the halfway bit, because there is normally significance on those as well. So let's enter a trade on this. It's going to be minimal again. This is a forward test, okay? This is a forward test, guys. So let's just see if we can get a bit of profit. Quantity and 0.10 is what I'm risking. I don't want to risk. So there's a 0.15 risk. Okay, so the percentage risk is under, is well under a quarter. Okay, so I'm only going to risk a 0.10. Yes, there's not going to be massive amounts. Okay, there's not going to be massive amounts of profit. Okay, we're going to be risking £8 odd of what we've got. Okay, we're risking £8 odd, so that's just going to eat into our profit that we've got today. And the profit wise, if we take it there, it's £11 odd. I'll take the profit up to this area here, so there'll be an extra £11 something on top of the £12 we've already got. Okay, so if this was to go down and stop us out, we're still in profit overall for the forward test. It's not going to be harmful to the account. We would still be in a little bit of profit, but this is why I go on about not over egging the account. You know, build your foundation, build your profits, and it can be a pain at the beginning because you're not seeing the results that you want to see straight away. But believe me, once you get 10, 15, 20 days of running trades and you've got even 70 to 80% of them profitable, and you've built a pot, when your lot size starts to go up as well, you're going to see much bigger figures coming in after the time of doing that. Okay, so again, personally, I don't normally trade NZD card, but again, we're trusting the process. We're having a look at what is on this on the higher time frame. There is a little bit of a reversal going on. This pink line holds a lot of significance based upon the previous lower high areas. It's a massive turning point for if it does break that structure on that point there will be a higher push to the higher side. Okay, the line just below it where I've got to take profit is 50% of the harmonic scan. That's where I would generally go to in all reality. This median line, it is a good area, but for me personally, it doesn't hold as much significance as what these 50% of the overall scan. And more importantly, these segments here are very important, okay, because these will always be continuously tested. All right, so I'm going to pause the video. We'll come back in a short while. If I see anything else in the meantime, I'll come back on, we'll chart it up ready, and we'll risk a little bit again. Again, we're not going to be sort of at this stage risking big amounts. I am treating this as if from a 10K account status, I don't want to be losing more than a few hundred quid a day. So I'm taking that as a flip of the coin and looking at this as that's what I'm willing to lose through the day. So that is my balance I'm working upon, not 10,000. I'm working from like a 300 or 500 pound balance, and then I'm going to work my profits from that side of the fence. I think overall you're going to see how well this works, because again, you're not putting full lot sizes on it. Okay, we're steadily building the foundations to success, and that's what this is about. So we'll be back in a short while, guys. Back in a short while. Hopefully you're taking something away from this today. Be back in a while. So looking at the NZD card, it looks as if it's made. When I'm looking at this in hindsight, in fairness, okay, what we can see is it's already come up to that 50% of the harmonic scan, and it's pushing back down. Main concern at the moment is these higher lows. It's breaking structure of that higher low, so now it's coming to attack. It's coming to attack that area now. I would say, even if it was to come down, okay, and like I say, if it loses, it loses, to be fair. If it comes down and it breaks that, it's certainly going to push through, okay? What we now have to hope is it's going to come down, maybe test this a few times, and then hopefully make it push up. Unfortunately, at this time and what I'm looking at, I think it's these two higher low areas structure-wise are important, because if it breaks those two, it's going to certainly come down and break that area, and then it's definitely going to come back for the D point. We'll see how it plays out. It might prove me wrong. At the moment, not fussed, not bothered. It doesn't bother me if it loses, because overall we are only risking eight. This is in Great British pounds. We're only risking £8 out of the 12 we made yesterday. And again, there's a lot of people going to be looking at this and going, but you've got 10,000. No, we want to risk a certain percentage of drawdown daily, or a maximum, you know. Slow process. It can be a painful process as well, because people want everything quick. People want everything fast. It's the way society is these days, okay? But what I want to do is just prove to you that if you follow a procedure, stick to your rules, okay? That's what this is about. Sticking to the plan, sticking to your rules, you're going to be in the game long term. None of this flash in the pan. Look what I've done. I've done a whole lot size. I took $400, $500 of profit. No, you need to build your equity. You need to build your profits, okay? And we'll see where this takes us. Hope we've got one or two options. And again, it's about understanding price structure. It's understanding the movement of why price is doing what it's doing. And like I say, in hindsight, when I've looked at this further, I mean, obviously it's went up to test that 50% already. It's now coming down. There's been a strong sell, and the Heikin-Ashi candles, guys, just for the ones that are watching this for the first time, Heikin-Ashi candles, they are a trend-based candle, like for volatility and things like that. So the more you see flat-edged bottom top, flat-edged top candles, okay, that's a downtrend, okay? What we need to see is a wick on the top. The minute we start seeing an indecisiveness in price, okay, this will start wicking, okay? Unfortunately, what you're seeing at the moment, and again, this will be a lesson for you, what we're seeing at the moment, every candle so far in this downturn has been a flat top candle, okay? Plus the gap between this and this on the whole moving average is getting wider apart. So it's telling us the volume in the market is strong for on the downward move, okay? That's on the 5 minute though. Got to stress that, that's on the 5 minute. We go up to 15 minute, we can see obviously there was a buy signal here, but now it's crashing through. We'll go to the half hour. Big push on the downside on the candle. This now, if we look at it, we can see there's a wick on here. Okay, it's bounced, it's tested, it's it's tested the previous high or low. Okay, it's tested that structure. It's broke through, but it hasn't come through to push to come into this area. Okay, go up to the hour where the scan originally was, and you'll see what I mean by flat bottom candle, plenty of volume in there. Indecisiveness because there's buying and selling power either side. Flat bottom candle, flat bottom candle, flat bottom candle, and then on the next candle we started coming back in on the downturn. Okay, we can see we had a surgence of buying volume power here. It touched the 50% area of the harmonic scan. I've overlooked that. I should have looked at that beforehand, but hopefully the two higher low areas on here will hold its structure. This one's been broken for sure. Okay, so what we can do is this here. That's been broken. We'll go back down to the 5 minutes. Okay, that is certainly that has been broken. That's been broken there. So there's only one more that's holding structure. Hopefully we're going to get some wickiness and a little bit of a return. Where are we on general candles? See, we've only got one buying candle here, which is just above that entry point there. Shame. Let's take a look. It's still holding structure at the moment. We'll go back on the Heikin-Ashi. We'll come back in a while, guys, but that's my general overview. And look at this as we look and understand why price is doing what it's doing. In hindsight, looking at it, the trade's still going. Okay, take away at the moment one of two things. I'm not going to stress, I'm not going to pump into another position because I said earlier on, when you come into your drawdown, what you're willing to lose, you could then get into a second position and then use your stop loss at the tighter stop loss, and then if you get a push up, you've got some good profits there. I don't want to do that on this trade simply because obviously, one, the 50% of the harmonic scan there, and secondly, I honestly believe that this is going to come down and take the higher low out and then bounce down to go back to this D point based upon the strength of those Heikin-Ashis at the moment. Again, I hope it proves me wrong. But all things are pointing towards that. We'll pause the video. We'll come back in a little while, and then we'll take away what the lesson has been so far for today. Okay, and then we'll talk about that in a short distance. And then now, hopefully, you can see the understanding on why we're not putting full lot sizes on. Again, if the trade loses, you've paid for a lesson. But at the same time, it's been a lesson that hasn't really cost you anything because you've used it within the equity that you were trading from yesterday's profits. Okay, so we'll be back in a short while and see where this trade takes us. All right, so we're back. I just want to go over the little bit that I said before about the Heikin-Ashi candles. Okay, and again, I hope you're taking notes with things like this because it will help you in the long run. Heikin-Ashi candles, I would normally only trade when I'm using a certain field of play like the PitchForks and the Harmonics and things like that. I don't tend to use Heikin-Ashi any other time. I'm just going to share the screen. And I basically spoke about, let's get my face a bit bigger. I basically spoke about when there is a strong downtrend, okay, we have a flat top on the candle, as you can see on here. Okay, let's just scroll in. Okay, so you can see from this aspect. Okay, flat top candle. There was a sell pivotal point here, telling us on the hull. And again, if you want to get access to this, if you're not part of the Discord channel, just give me a shout. You don't really need to pay these expensive amounts on other platforms. and we had the strong sell coming down. Okay, as we've come down, we spoke about what I was possibly looking at earlier on. In hindsight, there with this up here, it had already hit the 50% of the harmonic scan when we scroll to the left. So I was a little bit worried. Well, not so much worried. I was a little bit sort of, maybe this has already made its play for me. But as we go down, you'll see flat top, flat top, flat top, flat top. And as we're coming down, the candles are getting smaller. Okay. Now, until I was expecting the lower high, the higher low, sorry, higher low, the D points are higher low. Okay, so we've got 3 higher lows from the D point. So we broke structure of this higher low. It's come, bounce, retest, and then it's starting to come back down. This one, if this second one's to feel, then we might see a stop loss being hit here. Again, overall, not particularly fussed, simply because we've got our protected balance because of the equity from yesterday. However, just take your attention into the nuts and bolts of it all, okay? What you've got from a field of play is flat bottom, flat top, flat top, flat top. Now we're getting the wicks. We're getting the indecisiveness, okay? So this might be a turning point. It hasn't come quite down to test into this higher low, okay? Now we're starting to get the buys are coming back in because doji candle, wicks, spinning top candle because we've got the body on the top, spindly bottom on the bottom, 2 spinning top candles, and now there's a bit of buying pressure, okay? So now we're about 20 seconds into the next 5-minute candle. There's a bit more buying pressure on here, okay? So I'm just going to go down to a 2-minute candle and just see what the 2 minutes is telling us, okay? So we can see in here, there's a little bit of buying pressure, a little bit of indecisiveness, and now we've got the last 4 minutes here. There's been buying power, okay? Hopefully, if we get another push and buying, taking liquidity from these 2 candles, because you've got to break the structure down. If we break through this here, this pink zone, we might get another flat bottom candle because the continuation and trend is going to be up over. So that means if the continuation and trend on the Heikin-Ashi candle on the upside, the flat bottom, the flat on the candle will be on the bottom. So when there's a downtrend, the flat is on the top. When there's an uptrend and the volume and the candle, the flat will be on the bottom end, okay? So spindly candle, flat top low, okay? We've come down, so the selling came down, pressure. The buy has come back into it, okay? As the buying pressure come back into it, it left behind its residue, its wick, its tail, okay? And then we started a fresh candle, and again, the buying power came as high as testing the top end, as you can see in here. But then the push of the selling came back down. We jumped back into the next candle. Because it was a buying one on here and there was a lot of buying pressure in here, this created a flat bottom. What we need to see for another flat bottom candle is a push to the buying side. And this here would need to exceed this on the top bit. But now you can see what we're seeing is the sellers are starting to come back in now, and that's going to start pushing down. There's around about what, 1:40 left on this candle. I think we're going to get a lot of consolidation between these 2 zones, okay? Simply because we've got higher lows and higher lows that might bounce around there for a little bit before it decides what push it's going to do. We go back up to the 5-minute, which is what we're playing from. Again, look at the wicks. Look at what it's creating on here. A lot of spindly candles, a lot of indecisiveness. What we need to see is this 2-minute play out and hit another thin base doji candle like what we've got here, make it green, and then we might get that drive up. Again, if it loses, we know why it's going to be losing, simply because we've identified structure-wise where we are on the higher lows. We've already played the 50% of the harmonic pattern. It might just be that it's going to be coming down to the push, but there is still a general bias for the upside, simply because on the 4-hour, yes, it's been on a massive downtrend. However, there has been a slight break of structure on the higher high previous. It's coming back down to test the lower areas. Just hopefully there's going to be a bounce off from this area. We'll see what happens. Again, the lesson that we're getting today is simply, if it loses, we were paying around about £8 for that lesson. The take profit, I'd be happy to go back to this area here, to be fair, and take around about 12 quid off the table for that. Let's hope it keeps a hold of its structure, but these structure points are imperative at the moment. These are the ones where it's going to be a make or break. Okay, guys, I'll see you in a little while. I'm going to keep an eye on the right-hand side of here, just to see if anything comes out for me to play. Cipher patterns I don't generally trade from, to be fair. What happens with this on the Forex via harmonic alerts? Every hour, I've got the hour, the 4 hour, and the daily gets sent across to my Telegram channel, to my personal Telegram channel, where we have 16 others taking advantage of that. And what happens is we get the alerts, we can jump on the charts to then see what we're looking at. So there's no searching as such. We can just simply get the alert, go to the chart, put on the drawing that's on the alert, put it on the chart, and then draw the pitchforks up, and then we work it from that. Okay, guys? So I'll see you in a little while. We'll see how this plays out. I think I'm going to make a little mid-morning snack before dinner and see where we'll go with this. I'm not going to be entering any trade as of yet on anything else, because we're going to be focused on the harmonic pitchforks. I will be possibly entering one more at some stage today. Again, it will be documented and it will be put onto this account. Whether it's videoed, I'm not too sure, because I do tend to try to get my videos done on a morning, and then I do my Forex fire trades on an afternoon for the Discord channel, which is in here. Okay, the Forex fire trades, which is what I put in here. Yesterday I called one out. Little bit of uncertainty with what's going on in Russia, but we hit a 20 pip profit from that trade yesterday. Okay, guys, so I'll be looking at some more trades today for that to go inside of here. Overall, with that being said, let's just take a look. We'll have a look at these fire trades, just so you can see what's going on. We've got a 930 pip count since from about a month ago, the 12th of in fact, no, the 13th. So just over a month and 2 days, we've gained 930 pips. Okay, again, this here has got 20 pips, so I think that's 950 now, to be fair. That's 950. I'll have to work that out properly later on, but it's either 930 or 950. We're on 20 pips at the moment on that other trade. I think that was a winning trade, to be fair, because it stopped out. Let's have a look. Go back on that. Just copy that. Paste in there. Put that in the green. That was 76.20 we went to on that. I do remember. So there'll be some more trades coming in on that shortly. Let's take a look at this. Hopefully we're going to get a bit of a turn on that. Going to get rid of some of this noise, just so we can concentrate what's going on. I hope you're taking some stuff away from us today. And then, yeah, we'll see where we are trading. I'll be back in a short while. We're back at it there, guys, and it looks as if the initial thought process is going to sort of stop us out. We've hit the stop on the risk to reward area. Again, I did have this set a little bit lower than that, just in case it was going to wick. I did that purposely for it was going to run. If it was going to stop us out, it would have to come into this field of play, okay, from where the price was. We're protected we're just here protected at the moment. However, we have ran through this higher low and we retested. We've come down, we broke through this higher low. And now, excuse me, it's retested it. Until this is recorded live, there's no hold back on this. So, strong continuation down in price is this going to hold? Will this hold? I mean, well, basically, just to give you an idea, with 2 pips from being stopped out. Again, are we worried? No, because we're still in our profit equity area from yesterday. And I'm going to let this play out a little bit more, because even if it does stop us out, okay, I'm still going to have a look to try and get in a trade for later on today, okay? But before I close any videos out and things like that, you're going to see where we end today's session from, okay? So again, looking back on the trade, what we've been doing, this 50% stuff is very strong. Doesn't matter where, anywhere in Forex, 50% is always strong. However, the pitchfork and the median, okay, there's a lot of stuff out there saying 80% chance to go to that. No, there's a good chance to go to it, but it's nowhere near 80%, to be fair. Unfortunately, from what I was looking at in hindsight and still going on the purpose and process, I now in the understanding know if this feels, why it's failed. Again, it's just a paid lesson, but I've went into markets, okay? I've went into markets on the understanding that if it does fail, I've only been using the equity that was built from the previous day, okay? So even though we've not hit into the profit, it's still a good lesson, and it's still good to document these sort of videos, okay? We might still get, I know it's within the realm of 2 pips, we might still get that turnaround, but hey, you never know, you never know. I'll keep the video going. I'm going to go and start making a bite to eat for my dinner time. And then within the next hour, we're either going to be in profit, which is very, very highly, at the moment where it stands, very unlikely, or we're going to blast through those 2 pips. That's in fact, it's starting to turn again. It's messing with us at the moment. It's gone to around about 3 pips before close out. I think it's going to close us out anyway, guys. I'm going to go make a bite to eat. We'll be back shortly and see where we are. And yes, we'll possibly take another trade, but I'll document where we are. Hopefully today's lesson, even though if it does close us out and we end up losing, you'll see that we are still in profit from yesterday. However, there's a lot more in-depth thought process going into this on how you take your trades, what you should do with your trades, how you manage your trades, but also obviously managing your overall balance. Yeah. So it's not always about seeing what you've got in your hand, as in 10K. It's what you have to balance that 10K. Okay. So like I say, and I'll keep saying this till I'm blue my face, it's a case of, if this was a funded account, okay, and you were working upon the parameters of another prop firm, you would technically only be working with 500 or a little bit more in equity as your main drawdown, okay? We don't want to be eaten straight into that. We want to build our pot, and we will get there. We're in this for the long run, okay? And that's what this is about. Yes, it might seem a bit monotonous. It might seem a bit, but I want the money now. There's a reason why people are not successful, and there's a reason why people are consistent in doing this in the long term. The more you take your time with this, there we are, stopped us out. The longer you take your time in the process and building your pot and working upon your equity balance, okay? Yes, I've lost, but I'm still $3 in profit, right about, it's English money, £2.76 in profit. Little bit upset with myself that I didn't recognize that we'd already went to 50% of the harmonic pattern. But overall, it's good for me to do these slip-ups, because it shows you I'm not perfect. I don't intend to be perfect, but there's a difference with what I've done today, okay? Yes, I did a failed trade, but the overall trade, I'm still in a little bit of profit. Let's me go on to the next year, or let's me go on to the next trade, which no doubt I'll do today, and move forward and put that little bit risk on it again to try and build a pot. I'm in this for the long run. I'm not here for the here today, gone tomorrow, I've blown an account, okay? This is what you get with me. It's an honest, real, raw, brutal approach, and it's the only approach that you should be taking into the market yourself as well. Okay, guys? So I'll pause the video for now. I'll look for another trade as I go make something to eat. If I see something, I'll come back on, I'll show you. If I don't, I'll close it out. We'll have another little talk before I close it out. Okay, guys? So I'll see you in a little while after I've just made me dinner. Hi, guys. So I'm going to take the decision to take a little bit of a break from the charts at the minute because, like I said, I'm going to have my dinner. I hope that the chat and the stuff and the process that I've been talking through today resonates with a few of you guys. Again, especially when you're going into these challenges and funded challenges, because like I say, not everybody has the 2, 5, the 10, the 25, the 50, the 75, the 100 Ks to trade from straight away. There's a lot of these where people get in for just a couple of $100, and like I said, there's a lot of people that try to get into trading straight away just by putting a couple of $100 into account. Been there, done it, burnt my fingers many a times. That, for me personally, in my 5 years of trading, okay, and like I say, I like to talk about these things. And the 5 years of me trading, I've done many not funded accounts, many sort of small accounts and built them up. When they get to a certain amount, I've sort of took the money away. But there's more of the mindset goes into the smaller account stuff than what it does on the larger accounts, if that makes sense. Simply because you've got little margin for error, okay? This is why the process and what I've done, what I've been through, and what I've experienced, once I've gone to these bigger accounts and I do my day-to-day trading, okay, and I went for the funded process with the 10Ks, the 25Ks and things like that, I've still taken into consideration that, yes, I've got this large amount of money, but that's what I'm using as my leverage, not as my overall account. I flip it I flip the coin over. So yes, I've got a 10K as like a bounty of leverage there, but I would use what, like I say, in instance of the FTMO, the 500 daily drawdown, I would use that as that is the balance that I've got to play with. So then I factor in and work my lot sizes and these smaller percentages to build the equity. And again, there's going to be a lot of people look at this video and possibly think, but you were on £12 of profit and you've took a hit and you're only £2 odd. Your account's 10 point whatever. Your account's 10K. So why aren't you risking more? Like I say, I fall back onto the process and the purpose of, there's a reason why I don't over risk. It's simply because when I do hit the winning trades, it's building my pot. Yes, I've lost a day. Yes, looking at, if we just share the screen, looking at this, yes, it doesn't look fantastic. £2.76. Wow, it's not going to break the bank. But I tell you what, anybody that's trading and risking 1% is going to break the bank faster and quicker, and they're going to feel the pain a lot more than what I will do any time of the day. I'm in it for the long run. I've been through the processes of losing accounts. I've been through the process of over leveraging. I've been through the process of chasing the money, been through the process of moving the stop loss. I have everything in place, first of all, and like I say, everything in place and set my stall out and commit to that's what I'm doing. If it feels, I'm going to understand why it feels before I move on to the next trade. And I've understood why that has failed today. Yes, it's cost me a couple of quid, but am I bothered? No, I just move on to the next trade and I'm still in a little bit of profit. I just build and build upon this. And like I say, forward test, stick to the plan, build and build and build and build. Then eventually your equity and your pot and your profits become substantial enough to then start moving into the pound a pip moves, the £5 a pip moves, the £10 a pip moves, because you've got to start at the very beginning, just like anybody else in this game. Don't over leverage, don't over risk, don't be one of these idiots that just think I'm going to go all in and I'm going to do an FTMO challenge in one day. And you see it all over YouTube. I did it in one trade. I did it in 2 hours. I did it in 5 minutes. Bullshit. Take your time, enjoy the experience, go through the process. Doesn't matter what happens, either way, when you're trading, you're going to go through the emotions. There's no two ways about it. You will go through it like a roller coaster. It's how you react. It's how you pick yourself back up. And it's how you go through that roller coaster that's going to get you through to the other side without going over too many hurdles, you know? So again, today has been a fantastic session. I believe, in my mind, in my eyes, it's been a fantastic session. Hasn't been a winning trade, but hey ho, it's given me the ability to be able to talk about the pitfalls and things like that. And I've protected that loss. I'm still in profit. I'm there to fight another day. There would have been many other people that are possibly getting into a trade like that. And when I'm going to do a 0.5%, I'm going to do 1%. And then their account will be well under what you're starting with. In this instance, you possibly be a couple of $100 down. No, there's no need for it. Protect your assets, and then you're going to be able to go on to fight a much better and bigger battle when you go into the higher numbers. Because once you go out to the smaller numbers and you built your equity, then becomes a bigger battle with the mindset as the numbers become larger. But with managing the risk in the beginning, you sort of get that discipline in place. And then when it comes to the bigger numbers, you will have built a solid foundation on understanding the price and why you are protecting the equity. Okay, so I hope that makes a lot of sense. Okay, guys, I'm going to go make a bite to eat. I might have another chart, or I might have another setup on this later on. It will be off camera, but just remember, guys, this is going to be on my Pepperstone with the account ending in 315, and whatever I do based upon the Fire Harmonics will be done on this account. And we'll see you tomorrow for another one. Okay, guys, so I'll catch you all later. Any comments, just drop it down below, give it a thumbs up. I'll always generally reach out to everybody. And this is not always about winning. It's about showing you the process and how to manage things. Okay, guys, so I'll see you all later.